This is the Financial News Network. I'm Christy Duffy. Johnson & Johnson reporting fourth quarter earnings results earlier Tuesday morning. The company posted a 12% profit dip and 5.5% decline in sales. Joining me now to discuss J&J's financials is analyst Jeff Jonas of Gabelli and Company. Welcome, Jeff.
Thanks for having me.
So Johnson & Johnson's revenues have been declining now for 2 straight years, slumping 3% in 2009 and 0.5% in 2010. Its drop in 2009 marking the first revenue dip at the company since the Depression. CEO William Weldon said on the call that its product recalls and manufacturing issues are now under control. There have been 17 recalls since September 2009. What is the company doing to ensure this will not be an ongoing issue?
Well, they've now completed inspections of all of their own manufacturing in the consumer business, which is about 80% of their total. And now they're inspecting their suppliers, and they're mostly through that process. So it does appear to finally be winding down.
Okay, but what other factors contributed to the company's declining revenue?
Well, the pharmaceutical business has faced challenges for 2 years now, as two of their biggest drugs went generic, Topamax and Risperdal. But they do have a very strong product pipeline, and things should start to pick up in 2011.
And aside from avoiding further recalls and what you said about the pharmaceuticals, what other revenue growth strategies were discussed on the call?
Well, the medical device business continues to perform well, both organically and through some tuck-in acquisitions. And that's now 40% of sales. It's their biggest single segment. So that should continue to help them out, as well as this turnaround now in pharmaceuticals and at least some stability in the consumer business.
The company's forecast for 2011 earnings was announced in the range of $4.80 to $4.90. Consensus was expecting more, according to FactSet Research, at $4.99 per share. What's your outlook for 2011?
Well, we had been expecting around $5 a share as well, but I think everyone was underestimating the impact of healthcare reform and just the fact that these consumer product recalls are dragging on throughout most of 2011. So I think our estimate is going to come down to be more in line with their guidance.
Okay, and what's your price target and rating on the stock?
We do rate Johnson & Johnson a buy. We think it's worth about $74 a share and will generate a good total return for investors. All
right, thank you, Jeff.
You're welcome.
Jeff Jonas of Gabelli and Company. For further earnings updates and analysis, stay tuned to the Financial News Network. I'm Christy Duffy.